Oil on the weekly time frame. I am looking at the chart and I noticed something. There's something I noticed. I saw that on the weekly time frame we are bullish at this level, at this area of price. We are bullish. All right, then at a point the market starts retracing down. All right, so I'm still looking at it, and then I said, okay, let me just concentrate on what is happening on the recent market area. All right, this is the recent market area. We don't want to bug ourselves with so much information of what has happened last year, 2 years ago, so many months ago. No, let us look at what is happening in this recent area. Maybe 2 to 3 months ago is fine. Okay, let's just look at this. Is a weekly time frame, remember. So one candle represent what? 1 week. All right, one candle that you see that opens and close represents a data for 1 week. All right, so from this most recent candle that is still forming down to maybe this area, you see that we're having so many candles, and we know that 4 weeks makes a month, meaning 4 candle is for a month. So from this area, this starting point to this area, we could say, okay, maybe probably it could be 3 months or more, but let's be very specific. When you click and put here, we look at this area, and we can see clearly that we have this candle is on the 27th October 2025. 27th October 2025. From 27th October to now is how many months? You see, we are talking about almost 7-8 months, if I'm not mistaken. It's even close to a year. It's even close to a year, just this area. You see what I'm talking about? So we don't care about what is happening in so many months ago or even so many years ago. We want to look at what the market is doing recently. That is very important. So let us break down this chart here on US oil. We can see clearly that the market did a change of character to the downside. All right, that is the most recent structure. So we can excuse me. So we can now mark out our swing high, and then this is our swing low. All right, so we can mark out our swing high and our swing low. Now that we have marked that out, this area you see here, guys, this area from the high to the low becomes our trading range. Becomes what? Our trading range. That is the area we want to concentrate in taking our trade. All right, as of the time of this analysis. Okay, so now that this area becomes our trading range, what you need to do is now to go to the daily time frame so we can understand the most current leg. When I mean leg, let's say trend of the market. Okay, on the daily time frame is where we look for our directional bias. Your bias is simply knowing if the market is bullish or if the market is bearish. We don't trade a ranging market. This is what I mean by bullish. When we can be able to spot series of break of structure to the upside, then we can say we are bullish. If we're able to see something like this kind of movement sideways, we are ranging. But if we're able to see the market break down and continue like this, then now we are now what? Bearish. All right, that is it. So we want to look at the current trend of the market on the daily time frame. Now we'll move to the daily time frame. Here on the daily time frame, from the swing low, that is from this area, we want to observe and read market structure. Market structure is very important, guys. You don't joke and play with market structure. In fact, market structure is everything, because when your bias is wrong, you keep making so much mistake in your entry, and you'll be entering into the wrong trades because you don't know your bias. Now, market direction and market structure is the most important thing when it comes to trading on the daily time frame. I can choose to spend more time on the daily time frame than even in other time frame. In fact, the daily time frame is the most important time frame for me. All right, so let us read the market structure and see what we have here. You have to clear your eyes very well so you can be able to see even small retracement in order to read the market structure correctly. All right, so boom, I'm able to see a break of structure to the upside. I'm able to see another break of structure. All right, remember I told you when you're able to spot two break of structure to one direction, it now tell you that the market is moving towards that direction. So we spot two. This is the first one, this is the second one. You see that the market continues. All right, so we have the third one here. I can see this guy, boom, this is a break of structure. All right, then at a point, see what happened, guys. This is a break of structure, boom. At this point, market retrace and then break this former low. When market breaks former low, it becomes change of character. That gives us change of character. All right, so let's delete this guy. So we have a change of character at this area here, boom. As long as there is a higher high or a lower low, there is a change of character. Let us zoom clearly to see it. You can see it very well. You can see that this low is lower than this low. All right, so we have actually a break of structure to the downside. That becomes my change of character. All right, so now that we have change of character, we now proceed. We see that we're able to see another second break of structure to the downside to confirm to us that the market is bearish. All right, we are looking at the most recent break of structure. This is it. Okay, so this has confirmed to us that the market is bearish. There is no other break of structure along this area, so we just have this first change of character, break of structure, then we are bearish on the daily time frame. Okay, so now that we have been able to get our bias telling us that this market is bearish. All right, this is the move here. This guy here, this market is bearish. So now that we are bearish, we simply go to the 1 hour time frame to mark out our point of interest, and our point of interest will be a bearish order block. A bearish order block, guys. It will be a bearish order block. So what do we have here? Let's look for an order block. This is an order block. This guy is an order block. Let us see. Okay, it has already been mitigated here. It has been mitigated here, and you see price falling. Okay, so now that it has been mitigated, where is the high of that order block? This is it, guys. Sorry, the low. I'm saying high. This is it. Meaning, what I'm saying is that it is at this level that this trade idea becomes invalidated. So we have something like this right now. This is a structure, this, boom. All right, so everything happening here are internal structures. So we expect price to come down to this other block and then take out what this next liquidity that is below. All right, next external liquidity. So that is what we expect. And unfortunately, price has tapped into our other block here. This is it. Price has tapped into our other block. So now that price has tapped into our other block, we are now expecting what? Our confirmation pattern. So we'll go to the 5 minutes time frame to see what is happening here. So here on the 5 minutes time frame, we're able to see a change of character. This is it. We're able to spot a change of character, and we are also able to see, let's use this guy here. We are looking for clear retracement, guys. Clear retracement. You can see that price is breaking structure to the downside. Breaking structure, breaking structure. Is this a retracement, guys? Let's look carefully so you don't make mistakes. No, it's not a retracement for me. So I think this is where we get the retracement here. Boom. Okay, so this becomes an inducement. That becomes an inducement that need to be taken out. You can see it has a clean fair value gap and another block. So a lot of people will enter off this other block and place their stop loss just below the other block or below the swing low. Then you see price gradually came in and sweep all of those guys. All right, so now price has swept them. Where are we going to enter the trade from? This is it, guys. Use my fib to measure from the break of structure down to the swing low. So this is the area I'm interested. This guy here, this is the area I'm interested in taking this trade from. All right, so this is the area. Let me delete this 1 hour. Okay, oh, you can see that price already tapped us in. Yes, price already tapped us in, guys. This is it. Price already tapped us in. So this will be 1:3. I'll just take my 1:3. This is it here. All right, so this is it on US oil. You can see what is happening. So with just this single type of technical analysis, you could make, this is 1:3. 1:3 means that if, for example, I risk $1,000, I risk $1,000 in this trade, I'm going to make times 3. That is what? $3,000, guys. $3,000. $3,000 floating. Oh my God. So this is it, guys. If there's any question, please do it to ask me in the comment section. I will reply and answer you guys one after the other. Thank you very much for following me. Okay, I love you.